Welcome to the deep dive. Wow, India's stock market it's really grabbing headlines everywhere.
It really is quite something.
The Sensex just blasted past 84,000, and Nifty 50, it broke 25,000.
Incredible numbers.
Yeah, and it means India's market cap is now over $5 trillion, puts it at, what, fourth largest globally?
That's right. Fourth largest. It
Yeah.
speaks volumes about the confidence, both from inside India and from foreign investors.
Exactly. So today, that's our deep dive. We want to unpack what's really fueling this boom.
Get under the hood a bit.
Yeah, look at the hot sectors, but also, crucially, the risks, and then figure out some smart ways you, the investor, can navigate all this.
Sounds like a plan. There's a lot to cover.
Okay, so let's unpack this then, these huge numbers. What's the actual engine? What's driving this unprecedented growth?
Well, it's not just one thing. It's several powerful forces working together. I'd say, first off, the stable political environment.
The election results from 2024.
Exactly. That delivered a pretty clear mandate. And markets, well, they love predictability, don't they? Continued reforms, business-friendly policies, that stability is huge.
Removes that layer of uncertainty, especially for foreign money, right?
Precisely. Then you've got just plain strong economic growth. India is projected to grow, over 7.3% this fiscal year?
That's a big number globally.
It is. And its broad-based manufacturing, services, infrastructure are all looking robust. It means real earnings growth for companies.
And you mentioned foreign money. It feels like that's playing a bigger role now. How significant are those inflows?
Oh, massive. We're talking foreign institutional investor inflows, FIIs, exceeding $25 billion just in the last 6 months or so.
Wow. $25 billion. Why India specifically over other emerging markets?
Well, partly that stability we mentioned, but also global investors increasingly see India as maybe the most stable emerging market right now, a sort of haven. Plus, that huge domestic market provides a buffer against global issues.
Okay, that makes sense.
And don't forget, massive government spending. The push on infrastructure, railways, roads, energy, it's enormous. Plus the PLI scheme, the production link incentive, that's really attracting global manufacturing.
Right, pulling factories in.
Yeah. And finally, you've got the RBI keeping rates stable. Inflation seems under control. The repo rate's held at 6.50%. That keeps borrowing costs predictable, supports liquidity. It all feeds confidence.
Okay, so a pretty powerful mix of factors there. Politics, economy, global money, government action, stable rates.
It's quite the confluence.
So given all that, here's where it gets really interesting maybe. Which parts of the market are feeling this heat the most? Which sectors are really leading the charge?
Yeah, good question. You can definitely see the impact flowing through. Capital goods are booming. Makes sense with all the infrastructure projects.
Direct beneficiary.
Absolutely. Then banking and financials. Loan growth is strong, and importantly, bad loans, NPAs, are way down. So banks are healthier, lending more.
Good sign for the broader economy, too.
Definitely. The auto sector is seeing a big revival, especially EVs. Lots of pent-up demand and policy support there.
Right. And IT. Still strong.
Yep. IT is doing well. Global demand for AI services, digital transformation projects, that's keeping them busy. And pharma, always a bit of a steady player, but strong R&D exports and good domestic growth, too. Kind of resilient.
Okay, quite a few bright spots then. But of course, every boom has its wobbles or potential wobbles. We need to talk risk. What should investors be keeping an eye on?
Prudence is definitely needed. While the momentum's strong, there are risks. A major one is always potential global slowdown, or maybe the U.S. raising interest rates more aggressively.
I could pull that FII money back out, couldn't I?
Exactly. That $25 billion could flow out just as quickly. Then there's the issue of overvaluations. Some parts of the market, particularly mid-caps and small caps, look, pricey.
Yeah, you hear that a lot. Things getting stretched.
Very much so. And that ties into the retail bubble risk. You've got a lot of new investors jumping in, maybe chasing returns without fully understanding the risks. That can lead to panic selling if there's a correction.
The herd mentality.
Precisely. And, in India, you always have monsoon uncertainty. A weak monsoon can really hit rural demand, agriculture. That's a perennial risk factor.
Right. Always something to watch. Okay, so we have the drivers, the hot sectors, the potential risks. What does this all mean for you listening? If you're trying to invest smartly here, what's the strategy? How do you avoid the pitfalls?
Well, the key takeaway seems to be discipline. Don't get swept up in the hype. The advice points towards staying invested in solid blue chip large caps.
The big established companies.
Right. They tend to weather storms better. Be much more cautious with those mid caps and small caps we mentioned. Avoid the hype stocks that shoot up on little substance.
Do your homework, basically.
Also, diversify. Maybe add some defensive sectors like pharma or FMCG consumer goods, which tend to hold up better in downturns.
Spreading the risk.
Exactly. And for the long haul, consider a systematic investment plan, SIP, into index funds or Nifty ETFs. Just invest regularly, average out the ups and downs.
Takes the emotion out of timing the market.
It does. And definitely avoid penny stocks, chasing the latest hot sector based on headlines. And as we said, avoid that herd mentality, especially near market peaks. That's usually when mistakes happen. If you step back and look at the bigger picture, it really feels like India might be in what some are calling a super cycle of growth.
A super cycle.
Yeah, think about it. You've got consistent policy, favorable demographics, that young population, and this incredible digital transformation happening. It's like the fundamental building blocks are really falling into place for a longer period of strong growth.
That is a powerful outlook. Okay, so for you, our listener, wrapping this up, the final take here seems pretty clear. Smart investing, whether it's in India or any booming market, isn't really about FOMO, that fear of missing out.
Definitely not.
It's about discipline, understanding what you own, why you own it, and sticking to your plan. So maybe the question to ponder is, what stands out to you about building a resilient strategy, not just in stocks, but in navigating any booming area? How do you apply that discipline?